Man, I love that new intro. You are tuned in to the Investing Bros. I am T. Shroom, and today I've got a very special guest. But it has been a very bullish week. We have seen prices go up and to the right. Chainlink let us know about it earlier in the week, and then Bitcoin came right on through and pummeled higher. And there's nothing that puts a bigger smile on my face than seeing crypto prices higher than they were to start the week. We're going to break it all down with someone special who's making their debut on the channel here in Investing Bros. That'd be Lunar Beaches Crypto. Going to be introducing him in just a second. He started his own YouTube channel and is really big into trading, really big into crypto. And so we're going to be kind of picking his brain and seeing what he's about and seeing what he's been seeing on the charts as well. Don't have a ton of news, but we'll get into some bigger topics of crypto towards the end of the channel. But without further ado, I want to go ahead and introduce you all to Lunar Beaches Crypto. How you doing today, Lunar?
I'm doing amazing, man. Super stoked for this collab, man.
Awesome.
Very happy to be here.
Would you say that you're on the moon?
Yeah, I'm on the moon, man.
Gotta love it.
Flying high.
Tell us a little bit about how you got into crypto. Were you searching through different Reddit threads? Were you looking through Wikipedia? Were you working on an encryption tool for the CIA? How did you find crypto?
Oh, 100%. No, actually, in 2017, I first heard about Bitcoin from a coworker, and he was using it to like buy stuff online that you probably shouldn't buy. And I was just like,
Gotcha.
Okay, I'm not touching that stuff.
Unpasteurized milk, things like that.
Yeah, exactly. Unpasteurized milk, maybe some gold flakes from here or something. I don't know.
For sure.
But I was just like, I don't really, I was kind of standoffish with it, and I didn't trust it. And then I had a friend hit me up 2020 in December. He was like, hey, man, you need to look into this crypto. Apparently it's like really big now. And my friend said, check out XRP. And I was just like, okay, I'll check it out. And then I looked into XRP, and then I looked into Ripple, and I liked the premise of the remittances and all that stuff. And that really got me into the crypto space.
Sure.
And then, yeah, basically like ever since it's been, I just dove right in. And then like for the first year was all like fundamentals, did a little bit of charting. But then I got heavy into the trading once I started seeing certain patterns really start to play out over and over and over again. I was like, okay, maybe I should like really dive into this, because then I could get an edge on and really like build a strong portfolio where I'm, buying low, selling high, all that good jazz. So
buying low, selling high. There's a thought. I never thought about it like that. So simple.
I mean, most people don't, but most people jump in when everything's just pumping to the moon, and they become exit liquidity. But the goal of my channel is to help people not become that exit liquidity. Anytime I see like euphoria in the news, just kind of like blasting off, and I just feel like, it makes me uncomfortable. FOMO makes me uncomfortable. Other people, they like to just throw their money into stuff, but it just makes me feel so uncomfortable. Like the whole ETF thing, when it was coming up, I was looking at the charts and I saw it coming up to that 0.618 on the micro or macro trend, and I was like, I don't like how this is happening right at this time. And then we see what happened. It ended up being a sell the news event, but to me, I think that's short term.
Absolutely. Well, that harkens back, and we got to talk to Magic Internet Money about this yesterday, but it's something that I've written down this week, which is swing trading goals. Number one is never get caught up in FOMO and FUD, and swing trading goal number two, learn to fade those that do. So you're kind of hitting there, Lunar, a little bit hitting there on kind of this theme as well. So it's definitely one that I've been bringing to folks this week, and it looks like it's not going away. This is a winning sentiment, folks, so we're going to continue to bring it up. Well, why don't we go ahead? You mentioned the charts. You mentioned trading. Why don't we go ahead and jump on in and see what you've got cooking? I know that you spend a lot of time on there, and I want to see what you see. Let's do it.
All right, guys. So this is my Bitcoin chart. This is on Bitstamp. I've got it on the weekly right now. If I just throw up my Elliott wave theory on here, I also have a logarithmic curve on here. Now, a lot of people are thinking that maybe this was a cycle. I mean, technically, it was a cycle top, but I believe that this is more of a grand super cycle type deal where we have a 5-wave structure to the upside. This was also a grand super cycle type deal right here. That's why I don't have that marked off. It's too small. Get too deep into the weeds on that. But yeah, so I don't have my logarithmic curve touching this point because I don't believe it was a high. Now, had this fourth wave broken down here, broken this first wave, okay. But in Elliott wave theory, we have an impulsive move, wave 1, and then a corrective wave 2, an impulsive 3, a corrective 4, and then another impulsive 5. So that's what I'm looking at just from a structure standpoint. And then if I go ahead and throw on like the 2016, 2021 bull runs or cycles, we can see they kind of line up almost exactly right at the same point right here. So, you know, I don't know if you watched Piper's my video on Piper Academy where we did the price predictions. I'm sure you did.
Oh, I did.
My prediction was 202,000 for this next cycle. And then I think we get, you know, a nice long bear market again, and then we come up and we peak for this grand super cycle. Now, this one is going to be a little bit shaky. I need more price action to develop. So that's kind of what I'm looking at. But for now, that's what I'm going with is that $202,000. I think we can. I'm looking at this being more of a healthy run, kind of like this one was, where we have impulsive moves to the upside, and then we get those nice corrective moves, 30%, and then we get another impulsive move to the upside. So that's what I like to see. I like to see that nice flow up and down, not this kind of craziness where we just pump to the moon and then crash, and then pump to the moon and then crash. I don't like that. Give me that nice up, down, all the way up to the top.
Yeah.
Before it's getting wrecked over and over and over again.
I like it.
So yeah,
that's something we've been talking about a little bit. Tim and I and some of the different guests we've had on the show recently is, you know, with institutions coming in through the spot Bitcoin ETF and, you know, eminently the spot Ethereum ETF, it's likely that crypto markets are probably going to do exactly what you just said, have a lot less volatility, you know, just put simply. So is that something that you're kind of forecasting as well and kind of expecting to be unique to this rally, this bull rally here?
Yeah. Yes, sir. Yeah, because, you know, when you introduce all that liquidity, it's just going to, you know, it's going to make things a little more stable, especially since you have these big money players in the market. You know, they're not looking to I don't think they're looking to dump the market like crazy, you know, not until so I'm a narratives guy. When it comes, I like to listen to the narratives.
Perfect.
So if they start pushing those narratives out, you know, buy Bitcoin, ETF, blah, 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 you know, and we start getting that euphoria, that FOMO, that's when I start looking at the levels really hard. All right, where are we reaching out to? Because that tells me that that's probably the level that we're going to be seeing a nice, healthy rejection from.
Yeah.
So, yeah, I just think we're just going to cruise up. So that would be nice.
It's interesting you say that. So I'm a big narratives guy as well. Right now, we're seeing, and I didn't pull up pretty much any news. I have one headline that was kind of interesting from yesterday we might get to. But in the news, there's nothing really market moving, in my opinion. But there's a lot of breaks. Right. There's a lot of headlines right now that are breaks on the market, like, ooh, crypto, maybe not. Ooh, there's hacks. Ooh, there's scams.
Right.
You know, and you don't see, and you see that when, you know, market manipulators are trying to say, hey, let's try to suppress the price. Let's try to keep it down because we didn't get enough. Right, ultimately, and that doesn't mean the biggest banks in the world. That could just mean somebody with a $20 to $100 million portfolio who's also owns a couple media companies or owns a couple smart PR agencies that have a little bit of influence in media, and there's many of those. There's probably hundreds of thousands of people that fit that profile. So it's not really rocket science to kind of look at the news in the same way you can look at the charts and kind of read between the lines and see what is being implied and what kind of efforts there are to try and steer the masses of traders and the masses of investors and new entrances like these institutions. So I absolutely agree. I do think we're going to see a lot less volatility in the future. I want to ask you a question too before we get more into your charts, because I know you've planned a lot. You've put a lot into the presentation you've got today. But just kind of a little bit indulging in this tangent, do you actually think that this cycle might be the last cycle where we see quite a bit of a bull market in the same way that we've seen in the previous halving cycles? Like, do you think that this might be a cycle where a bunch of new money comes in, pushes Bitcoin to potentially 500,000, and then it really just kind of levels off, and the next halving we have, it might go up a little bit, but it's not going to be 100%.
Yeah, I do kind of see Bitcoin kind of stabilizing out once we have a crazy parabolic run. I mean, you just almost got to think that once you have that big run, there's going to be a massive crash, and I think that's going to scare a lot of people. And that's probably going to be what it is. It's just going to scare a lot of people. One of my biggest narratives that I'll be watching is Congress. So the Fed decided to what was it? They said it was unethical, right at the top, unethical for them to hold stocks, right? And so Congress is trying to push this bill to where they make themselves, it's unethical for them to hold stocks. That's their narrative that they're going to be going with. So if I start seeing that's where I think we might see a top, is when Congress gets banned from owning stocks, then we see a nice crash market because they're selling the top. So that's the way I look at it. So because the Fed sold, you don't have it on my chart, but the Fed sold like right here at this at the last peak. Like they said, we're getting out of the market here. It was either here or here.
The Fed sold
peaks,
Bitcoin?
the Fed was like, we're done. No, the Fed sold their stocks. They started getting out of their stocks.
Gotcha.
So they started shifting capital around and all that stuff.
Gotcha.
And but like all the markets kind of had a pullback that year. If I believe, let me go to Dow Jones. So yeah, 2020, this peak up in here. Yeah, it was November. So November, that is when the Fed said we're going to stop owning stocks, and then that's when they started selling off, removing them from their balance sheets. Which to me is also, so reverse repo.
A little bit, yeah, not intimately.
Yeah, it's kind of like it's almost like another way to put liquidity into the market. Quantitative easing. It's basically another form of quantitative easing. So that's the way I'm looking at that, and I think we are in a secular bull market, to be honest with you. But we can go into that a little later. What do you got there?
Just to hit on that, so this is the credit and liquidity programs and the balance sheet. So this is the total assets of the Federal Reserve. To my knowledge, they don't hold stocks, but what they do hold is bonds. So T-bills, and
maybe it was bonds, yeah,
and also mortgage-backed securities. So, which is it's just debt, right? It's mortgage debt. So ultimately, you can kind of see they have been rolling that off of their balance sheet since 2022. It really peaked in March of 2022, and then has come down. And there's been a spike, but that has really, really rolled off. And that may go ahead.
I may have misspoke. I think it was the members of the Fed.
Oh, potentially
couldn't own stocks personally. Same with like Congress. I believe that's what it was. So
it's an interesting narrative. If I, just hearing it off the bat, first of all, Congress is a very, very small group of people when it comes to the overall investing class. People that invest. I think though that what it could be is a huge shift in kind of Washington-based investment, where investors look to Washington, look to Pelosi, look to other other elected officials who have to publish what they're investing in, and Washington just kind of loses the influence that it has on Wall Street from an actual trader standpoint, not from a regulatory standpoint. I think that could be significant, but the overall percentage of dollars being traded on the New York Stock Exchange, or even investing into the New York Stock Exchange from folks, elected officials, is, in my opinion, probably a drop in the ocean. Now their aides, right, and their their families and things like that are just kind of just co-signing, right, or copy trading, if you will. That could potentially have a multiplicative effect. But I absolutely think that elected officials, it's not even that they shouldn't be investing. It's that it seems like there are certain elected officials that get in there just to do that, just to invest. And I see the logic in it. You can make a lot of money, right? But you're doing public service, and doing public service, one of the things you have to do is sacrifice all of the money that you could be making to do that, which is a lot less attractive, right?
Jimmy Carter sold his peanut farm, right?
There you go. There you go. So there's definitely, the finger can be pointed on both sides of the aisles. But I think we've given this conversation some good smiles per hour. So let's go ahead and jump back onto your chart. I know you've got a lot more to cover, so let's do it.
Oh, well, okay.
There we go.
Yeah, so
quick transition.
Yeah, here, just throw it in there. Just throw you in there. Yeah, I want to look at. Let's take a look at the Dow Jones. I find this interesting. So if people that are just now starting the chart, they can go ahead and go to their trading view, and they hit this little plus sign right next to the ticker. Okay, and that is a compare chart. So what I like to do is I like to throw in all different types of like economic data. So I'll throw in like an M2 money supply. I will throw in the price of Bitcoin. I'll throw in gold. I'll throw in Fed funds rate and inflation rate year over year. And then like I'll throw all this stuff on my chart, and I'll be like, all right, so what happens when this happens? And what happens when they cut rates and do all this? So one of the biggest things now, the reason why I picked the Dow Jones is because Bitcoin is very tied to the price action of Dow Jones. Now, before I get into all of this, I'm going to try and prove that to you real quick. So when the Dow Jones, it seems like every single time, right when the Dow Jones is peaking, we have Bitcoin start to lose its steam and really fall off a cliff. And then not until the Dow Jones sets a new all-time high does Bitcoin go into a new all-time high. And this has happened basically, I mean, every time that Bitcoin has gone into a new all-time high. It hasn't done it until the Dow Jones has broke out into a new all-time high. And it's about within a 6-month mark, I believe. 6 weeks or 6 months. I should nail that down. But yeah, but you can see our bear markets are essentially the same. Big drop. I mean, that one's the obvious one. This big drop right here. We got bottomed out on the Dow Jones, bottomed out on Bitcoin, and then we had our mid-cycle run up here as the Dow Jones was having its little run up here. So, you know, there's a lot of confluent or correlation between the two, and I believe that's because the capital markets, you know, it's all about the capital, the flow of capital, where the money is going throughout the markets. So that's what I like to look at. And then, so the yellow, I believe, is gold.
Looks like it.
Yeah. Yeah, this purple, sorry, I should.
Purple looks like inflation, maybe.
Yeah,
or
well,
the fund
I think
rate.
the bright purple one.
No, inflation.
I need to put a red, make this red. So this is our inflation.
Oh, it's the unemployment
so the
rate.
purple, yeah, this is our Fed funds rate right here.
Okay.
And so when our Fed funds rate was a little high up here before they started cutting. Now, this is why I'm not real bullish on cutting rates, because it seems like that starts the end of the bull cycle. And then once they really just slash it, then things really start to get moving to the downside. I can go back to the past when this has happened, like right here, cut rates, bam, we just go straight down, basically. I mean, I can go to right here. Yeah.
And when you
cut
say
rates,
we,
and then we'd have a bear market. I'm sorry?
when you say we, is that the Dow or Bitcoin that you're pointing out there?
The Dow.
Okay.
Yeah, the Dow is the candles. So, because to me, it's just all about the capital flow, right? The flow of capital. So when we have interest rates high and our inflation high, we're at a peak in the market. In my opinion, that's kind of like the peak of a cycle. And then once they start cutting rates, I believe this induces uncertainty in the market.
Mm-hmm.
Anytime the Fed is going through like some type of hiking cycle or a cutting cycle, like
Mm-hmm.
it kind of starts to give a little bit of uncertainty about where they're going, and this kind of makes people, traders, have more of a, or investors have more of a risk off, perception of the
Mm-hmm.
market, so they pull the money off, and that's why we get these moves down in those time periods. And then once the Fed kind of figures things out and, starts giving us the dovey-dove talk, then things really start to get going. So,
The lovey-dovey. I like it.
Yeah, the lovey-dovey. The lovey-dovey. Mr. Jerome Powell and his lovey-dovey.
Yeah,
Powell.
just to illustrate that
But yeah, so I'm just looking at...
Yeah, just to illustrate that further as well, because I do think about this quite a bit, right? Because everybody right now is anticipating one of the big narratives, we talk about narratives, is the Fed cutting rates in 2024. So if you look historically, you can kind of see that indeed in red, I believe, is the recessions that kind of come in, and they do coincide with the beginning of rate cut policies, so and monetary easing, right? So you can see here, and then the rates come all the way down to zero and don't come back up until 2016 when Trump is elected. It doesn't have as much to do with that administration as much as just the economic kind of climate. But then when it comes down again, the rates come down again. They start to cut. Sure enough, you can see another recession ensues. Now that had to do with a pandemic, right? And now we're sitting up here, and the rates are at what, like 5.25 right now. And so whenever there starts to be a cut, we could be headed into a recession. So that's why there's question marks here. Are we headed into a recession? What I try to remind folks is that cuts are bullish. Don't let anybody tell you that cuts aren't bullish, because you've just stated there, when the Fed cuts rates, that is increasing the liquidity. It's making money cheaper, right? It's now cheaper to go get a loan. Those interest rates literally just come down. It's cheaper to loan money, or to borrow money and invest in new projects, invest in crypto, invest in whatever you want to, bigger Christmas tree, whatever it's going to be. And so cuts in and of themselves are not bearish. They are bullish. The reason why they often coincide with these periods of recession is because the Fed is anticipating, they're projecting a recession is coming, right? They see a rollover in unemployment, in inflation, whatever it is, right? In this case, it was the dot-com crisis, and here it was the financial crisis, the housing market, and here it was the pandemic, and whatever we're going into now. And then you can also look way further back in history, and I believe it also correlates. But it's a correlation, and it's a weapon. It's really a tool. It's saying, hey, a recession is coming. Let's go ahead and use this weapon. Let's fire on all cylinders and try to kill, the negative economic forces that are coming in, right? Which would, in the dot-com crisis, it was overinvestment into websites and the internet infrastructure. And in the housing market, it was, inappropriate and overinvestment. And, it was a lot of things in essentially the housing market, right? And that had to be remedied. And luckily, they had elevated rates to be able to say, we can go ahead and fire at all cylinders at this problem. But it is not the cuts themselves. And you weren't saying this. I'm not saying you were. But some people get confused. That it's not the cuts themselves that induce a recession. It is the cuts are used to prevent the recession or quell, mitigate the negative effects of the recession. So what we're going into now, and the Fed right now is projecting the recession to be 2027 from last I checked, right? And so, so that's just their economic models. That I don't think that they think that they're that accurate.
I was about to say, they actually said that word, recession. And okay,
and so I don't think that we'll see. I think that we're going to see the market is going to be disappointed. I do think the market's going to be disappointed, the stock market, and cuts are going to come later. But I have a question for you as we get back into your charts. I know you got one pulled up that I had a request for. But my question is, my question is, do you think that the market probably rolls over in the second half of 2024, the stock market, because it is disappointed, it isn't getting those cuts that it thought it was going to get? Do you think that rolls over into crypto, or do you think that Bitcoin halving narrative is so strong that it kind of gets decoupled, right? There's a huge decoupling from the market, the Dow, the NASDAQ, and crypto prices.
If people view it as a flight to safety, yes, but I'm not sure people are there yet. What was something that I saw? 78% of institutional traders surveyed have no plans to trade crypto, says JP Morgan.
That was one of the breaks
I
headlines
don't.
that I saw. Go ahead.
Oh yeah. Yeah. So I don't even. Let's see. It says global investment bank JP Morgan conducted a survey of over 4,000 institutional traders and found that 78% of them have no plans to trade crypto or digital coins, while 12% do. So they're missing 10%. In addition, 61% of traders predict artificial intelligence, machine learning as the most influential in shaping the future of trading over the next 3 years. So I could definitely see, man, I don't know. The way I'm looking at it is that the rates stay high for longer, and I think that's going to end up being bullish for the market. The reason why is because I believe in max pain, and I believe the max pain isn't going to be to the downside. I believe it's going to be to the upside.
Mm-hmm.
People are going to be wanting to get in, and then once they start cutting rates, that's when people will feel safe to get into the market, start putting their money in it, and that's when the institutions start using them as exit liquidity because they need the people to come in to buy to sell to. So that's just kind of how I'm looking at it. I don't know if Bitcoin is ready to decouple just yet, man. That's an interesting question. I'll have to ponder that one a little more.
I would take the over on it as we transition back into your charts. I would take the over. I do think that Bitcoin, because of the halving event and because of the way that it seems kind of Wall Street's positioning is for this cycle, I do think that Bitcoin is going to decouple from the market and it's going to get quite an allocation because as Nvidia, Microsoft, Facebook, even Apple kind of corrects and the market kind of disappoints. I've got the CME futures pulled up here. There is currently in May, they're predicting with 52% certainty that there will be a cut, and then in March, much more recently, they're predicting a pause. Right, so the market is starting to adapt. This was not the percentage. This was not the predominant prediction just a few weeks ago before Jerome Powell went on to 60 Minutes. But I think that 60-minute special kind of set the bond market straight, and that has been corrected since then. But if we look at May, the market is still thinking we're going to get a cut in the first half of 2024. So I think that the market throws a tantrum in 2024. It signals risk off. You do see a big rotation into gold, into silver, and into commodity ETFs. There's plenty of places to hide if you want to get out of the equities markets, real estate. But I do think Bitcoin will be a shining star, and I think that's why these ETFs came out when they did, is because they wanted to have the ship ready to go ahead and onboard all of the wealth to go ahead and escape and I don't think it's going to be a crash in the stock market. It's just going to be unattractive. It's going to be less attractive to invest.
Do you think that's why they waited to have like so many ETFs ready to go? I think Gary Gensler was kind of getting more ETFs because he didn't want just BlackRock and Grayscale having so much of the market share. What do you think about that?
Yeah, absolutely. I think that it would have looked really bad if he just approved the ARK Invest 21 shares ETF.
That one,
it would have looked really bad if it was just one. That would have been gross favoritism. If it had been BlackRock, there probably would have been an outcry, but it ultimately would have been subdued by their media capabilities.
Yeah.
But ultimately, I think from that standpoint, Gary and the SEC did a pretty good job of making sure that the wealth got spread out. And of course, the biggest among Wall Street are still the ones winning, being Fidelity and BlackRock. But it also kind of showed the market just how much power and just how much accumulation of Bitcoin Grayscale had been doing and how significant those ETF fees were. So we learned a lot. We learned a ton from that moment. But But I've said several
Yep.
times, let's transition to the chart. I want to see what else you got cooking, because I really liked the way that you presented this over on Piper Academy. And speaking of which, we got Army in the chat. Army Piper said, "I like that you like the like." We gotta smash the likes, guys. Smash the likes for Lunar, Beaches, Crypto. Let's get to it.
Show me some waves. I'm not even looking at the chat. I don't even have the chat pulled up.
Uh-oh.
Um, I don't know why. I just, we kind of got on the call and I was just like, hey, let's. I just jumped on. Anyway,
Absolutely.
so yeah, this is actually a Cartesi CTSI.
Cool.
So something that I look for, and I know Piper looks for this too, is like these power of three different phases. So you have like a distribution phase, an accumulation phase, and an expansion phase. So Cartesi looks like it's in one of those phases where it's about to just blast off. I also just really like the project in general. So we did get this this distribution here, and then if I take my Fibonacci and I go from a swing high down to my swing low, then I go from my swing high to my swing low, and then I have project out to the 4.236, which is sitting at about $7.18 for an increase from current price of about a 24x, 2,400% essentially. So Cartesi is one that I'm definitely looking at. It is a optimistic roll-up feature for Ethereum. It just helps with like scalability and stuff like that. It's more of a developer project. I'm really big on projects that have heavy developer activity, just because the last bull run, we saw that the projects that had high developer activity seem to outperform the rest of the market. So that is something that I like to look into. That's why I had this chart list is top dev momentum. I looked at this a couple of weeks ago, and I just looked up, dev activity, and I just created an entire list based off of that list. So I created an entire watch list based off of that. And so I just watch these all the time. And these are all the ones that what's the top?
Yeah. What's
like
the most developed?
Here?
Yeah, on your list here.
Oh, the most developed is Ethereum, I think. Of course, Ethereum. Oh man, I used to have these in an order. Sorry. Yeah.
So these are just tokens that are coins and tokens that are consistently outperforming the rest of the market when it comes to time developed.
Right, time developed, but also have like the most commits for development, most full-time developers. Then you have your part-time developers, and you have your commits, and it just shows activity and interest in these chains. So I show interest and activity on these chains. So that's kind of how I look at it. I'm not really sure which one was the number one. I know Ethereum was number one. Cardano is has heavy dev activity. So definitely like me some Cardano. I like Cardano just because of the chain itself, though. Also, so
what about it do you like about Cardano?
I like how I like their approach to developing it. I really like how they take their time and they just try to get things right instead of just throwing things at the wall and seeing what sticks. So, to me, it's sufficiently decentralized, and I'm not real tech savvy, so I kind of just go with what I see as far as, I listen to Charles Hoskinson talk about it, and he can talk for, hours and hours and hours about it. And sometimes I fall asleep, but, it is what it is. I'm always, downloading as much information as possible, but that's probably a downside. That's why I look more at charts, because I'm always looking at so many cryptos and I'm trying to pin them all down, but it's really difficult to pin down so many different cryptos. So that's why I'm just more into the charts than I am on the tech side. I do like to look at the different sectors, like what's AI doing, what's gaming doing, what's layer 1, layer 2s, all that stuff. So that's kind of how I look at building out my portfolio, is just kind of, you know, a consolidation between all of those, between how does the chart look, what is the hype behind it, what is the development on it,
Mm-hmm.
what sector is it in, is that sector seeing a lot of spotlight right now, just all different kinds of things that I just kind of throw into it to try to give myself the best opportunity. So
Gotcha. I
risk
like
to
it.
reward opportunity, that is. So,
And now,
yep.
what did you think when the headlines for Solana? I think it was this week. Yeah, I think it was this week. I get my weeks messed up. When the Solana, yeah, it was definitely this week. The Solana blockchain went down. What were your thoughts on that? Did that kind of shock you at all?
Did it shock me? No. um, Man, it's kind of funny. I had just, saw a little bit of a video before that. Some. I'm not even going to mention names, but they
Sure.
put out a video about Solana, and the very next day it goes down, and I'm just kind of, I don't know, man. It's I've never really cared for Solana just because of it has the it's centralized mostly, but it's the outages, man. Just it happens all the time. I know it's the first time in a year, but it's also, we're just now getting into more bullish activity, so that shows that there's more activity on the network. And
Mm-hmm.
if you remember last bull cycle, that thing went down how many times in during the whole bull cycle? I mean, several times. And one time was for like 2 days it was down. And I don't think that's what crypto strives to be. I think we're striving to have the fastest, most efficient, and cheapest transactions possible, and to provide also financial freedom, kind of personal ownership of your money. And that's kind of, but we're building out a whole new economy, guys. Like, I don't think I don't think a lot of people really, well, the masses really don't know, but
Mm-hmm.
I think we're building out a whole new type of economic system
Yeah.
and it's going to take some time.
Yeah. All
But yeah,
right.
you got some.
You brought us here. You brought us to this
What's up?
conversation. So I've been listening
Okay.
to Balaji's. You may not know Balaji Srinivasan, or some. It's his last name's kind of hard to pronounce, but his podcast, The Network
Mm-hmm.
State, he actually just had
Mm-hmm.
Anatoly on, who's kind of the leader over there at Salana.
Mm-hmm.
And I listened to the whole
Mm-hmm.
episode. It's really good. It was recorded before the outage, but they just go really in depth on the Solana phone. Well, Balaji makes this interesting kind of prediction, which is best illustrated actually from this chart, this table, which is the top by market cap, the top companies in the world. And what Balaji's theory is here, his kind of thesis, is that these companies, what you'll notice is they're organized here by country, right? So Saudi
Mm-hmm.
Arabia and the United States have the biggest corporations in the world, the biggest and best organizations when it comes to capitalist endeavor of profit producing, value creation, right? It's America by a long shot, but then also, the world still needs a lot of oil, and Saudi's right there to give it to you. But what Balaji's saying is that this trend is actually going to end pretty soon, and by soon could be 10, 20, 50 years, right? We might see it in our lifetimes. But that the biggest ideas and the biggest, the most used applications and tools in the world, some of them will be still kind of set on top of nation states, but a lot of them will actually be set on network states, such as Ethereum, such as Solana, such as Cardano, and obviously Bitcoin as well, as Bitcoin kind of moves into layer twos being a little bit more of a possibility with ordinals and
Mm-hmm.
different things there. But Taproot, that's what it is, with the Taproot innovation over there at Bitcoin. But I kind of wanted to get your thoughts on that, and we can park here or we can get back on the charts. It's up to you. But I would like to get your either quick or elaborate kind of reaction to that thought. Is like, there's been kind of this push and pull, especially when it comes to TikTok being owned by China, right? And they're not
Mm-hmm.
willing to give up, a majority stake. And so then, the U.S. government says, okay, well, then our state workers aren't going to be able to download your app, right? And so there's this there's
Right.
this little bit of this geopolitical aspect to these technology apps that we use. And Balaji's coming along and saying the solution to this is actually not a geopolitical solution. It's just a neutral solution, right? It's something in the middle. And so that's going to happen in currency, right? We may see that very soon, depending on how the market ends up testing the strength of the dollar and the strength of the U.S. economy. Which my prediction there, and I know I'm getting to a question here, Lunar. Don't worry. My prediction there is that the U.S. dollar and the U.S. economy, it has been untested for a long time. It has just been a kind of assumed the grandeur and the strength. I think the world is testing with crypto, with the BRICS movement. It's testing the dollar, and my prediction is going to find out that it is very strong, and that is going to be a lot longer of a downward slope for the U.S. dollar, and that probably won't go away in the way that a lot of crypto bros and a lot of like the BRICS fans were thinking it will. So that's my prediction. Could be wrong on that. But overall, what do you think about this kind of shift to blockchains instead of building on top of Europe or building on top of America or China infrastructure, building on top of just the internet, which isn't owned by any one state necessarily?
I mean, that is interesting because I do know. So a lot of money has been parked into your stock market, into the stocks, because stocks for a long time have been seen as a store of value. But the issue with that is it's you don't really, like, you own a share of the company, but it's not like you own an asset. So I don't know, man.
Yeah, you own
I
paper.
agree.
Yeah, you don't
Yeah,
actually
you own
own Google
paper.
servers. You can't sit there and say, "Hey, I
Right.
want to run a company on top of your servers that I on top of the company the servers that I own." You just own paper.
Right.
And the only thing that
Yeah.
really gives you the rights to is price action. Buy and sell when you want, which isn't nothing, but it's
Yeah.
not server. It's not RAM, it's not GPU.
Right. Yeah, there's a big chip war going on right now. That's just kind of, I'm sorry, I don't really have an answer for that.
No worries.
Just to be honest, I'm kind of I'm kind of just working it over in my head, trying to think of how to put everything. But yeah, I mean, I pretty much agree with your general sentiment, is that things are just moving. Things are changing. The dollar's getting challenged, and because of that, it is going to be, in my opinion, you agree. I now know that you agree, is that it's going to be a slow death. It's not going to go quickly, I don't think. Something dramatic would have to happen, in my opinion, because there's just so many dollars out in the world, and everything kind of just runs off of that. So it's kind of hard you can't just shift from one thing to another. Now, when it comes to BRICS, I always thought that thing was never going to go anywhere, simply because of the nation states that are involved. And can authoritarian dictatorships come together and say, we want one currency that's not their currency? I don't think so. I don't think any of them are willing to do that, because that gives up too much power to another country. But maybe they work together and they try to take us down. But I don't know, man. It's going to be difficult for them to do that, in my opinion. So.
Yeah. Did you listen to the Tucker Carlson and Vladimir Putin interview at all?
For like the first hour.
Okay.
I haven't finished it yet. So.
Yeah, I think this plays into it, because I think with the BRICS kind of thesis and like what they're going for and the momentum behind that, right? I feel like that interview did a lot of damage to the BRICS, because it kind of showed Vladimir Putin to be, he's clearly a strategic thinker, and he's clearly sitting on top of an empire, right? But he's also operating with this massive ego, and that was just my take. Is like he's operating with this very almost medieval way of thinking of like, this is our land because of the history, and he spends so much time on that, when in reality, the real reason that it seems like he's invading, or he's trying to he's doing what he's doing there with the military, is because of NATO, the NATO encroachment. But he also
Mhm.
says that too. So he seems like he's pretty confused about exactly, kind of why he's doing it. Exactly, the different the optics of it from different audiences.
Mhm.
It
Yep.
seems to me like the the public kind of had a lot more fear and a lot more kind of respect, fearful respect. I'm sure there's a German word for that,
Mhm.
for Vladimir. And this interview kind of gave a lot more dimension to him as like this very
Mhm.
still strategic, still intelligent thinker, but very dated, very old. Just like the way of
Yes.
thinking is like, okay, but this isn't how is this fit in the bigger picture? You're not really pushing humanity forward. Versus we look at people like Elon
Right.
Musk and people like Balaji,
Mhm.
obviously, Satoshi Nakamoto. It's like there's people today though that are like nation states are cool. We probably still need them, but here's tools, here's ideas for the future that don't care who has oil rights, right? Who has land
Mhm.
rights? Where NATO's encroaching from where or when? And I think that a lot of Gen Z, a lot of millennials are hearing and seeing kind of these different dynamics from leaders of the world, and they're like, why would we ever side with these old ideas? Anyway, that's quite a tangent. But
I mean,
you know,
I agree, man. It's just kind of, you're just thinking about the history instead of thinking about the future,
right.
and that's basically summing up, very small snippet of what you just said. It's just kind of just stuck in the past, I mean, and not trying to move towards the future. I mean, it just seems like that's where he's at. But yeah, I don't. I like to keep my mouth shut on certain things, so
Sure.
because
Sure.
yeah, I know, but I don't feel like getting any. I just want to be loved. Okay, no.
Absolutely. Well, that's a good opportunity to remind folks there are links in the description so you can hear more and see much more charts from Lunar Beach's crypto. Those links are to his YouTube and to his Twitter. Lunar, why don't we go ahead and spend as much more of the rest of the show as my curiosity will allow? I can't say that we won't go into another tangent, but let's get back on your charts and let's see. You were showing us Cartesi, which is really cool.
Hmm.
That's probably something that other folks are not clocking at all. But what are some other opportunities that you're seeing?
So one of my bigger gaming plays is going to be Sandbox. I'm pretty sure everybody knows Sandbox. Now, generally, so I'm going to back up real quick because I want to go over something real quick. Let me find a different Bitcoin chart. Let's go to Coinbase. So I have. So my concern for leading up into these ETFs, not really the ETFs, but do you follow Blockchain Backer at all?
Blockchain backer. I don't believe so. I
Yeah.
think I've heard the name, but
Okay. Yeah, I've been. He was like my first YouTube channel that I really got into. But he has this level called this 0.702 that he goes into. It's basically the halfway mark between the 618 and the 786. And this level, historically has been hit several times to mark tops. So that level just so happens to sit. Ooh, lock your fibs. Sorry, Piper. Sorry. I meant to lock my fibs.
gotta lock those fibs.
Got to lock those fibs. Put hashtag lock those fibs in the chat. Let's go. 0.702 is right at about the $53,000 mark. Now, why is that significant to me? That is significant because if I come over here and I take a look at, if I can find it quickly enough, market cap. There we go. Bitcoin market cap. That also happens to be right at the $1 trillion mark.
Wow.
So to me, that could say that that's another point of heavy resistance, just because it's a psychological level. And if we go back and we look at the past on Bitcoin here, and look at this past market cycle, we actually see Bitcoin do a 4.236 extension on its market cap, and it nails it. It absolutely nailed the top of it right there. So it did a full 4.236 extension on the market cap, not on price, but on the market cap. So I like to look at market caps because of that. Because that happened, that's why I like to look at that. Now, us approaching that 702 level right there at 53K, right there at the $1 trillion marks, that's kind of going to be the next big level for me that I want to see us get through. And I want to see us get through it with conviction. I don't want to see us, kind of waffle around through there. I want us to break it, get above it, and then hold above that $1 trillion mark.
Mm-hmm.
So going back to Sandbox, if we do get that move, now I was projecting out, but prior to the ETFs, that the ETFs were going to get us to that $53 trillion, that $53,000 mark and that $1 trillion mark, but that didn't happen. So now it's kind of like changing I'm kind of having to rework my whole thesis because I was originally thinking, okay, everything's going to blast off. You're going to have some coins that didn't make all-time highs last cycle make all-time highs, and then you're going to have the coins that did make all-time highs come up and do at least a 50% retracement leading up into that $1 trillion market cap for Bitcoin. Things change. ETFs make me a lot more bullish on crypto in general. People start looking into other projects. I've got a whole series that I've been working on really called the Coinbase Portfolio Files for new people that are new to crypto, and just trying to get them onboarded, starting off with Coinbase because it's the easiest in the US and and personally more secure than anything else. Sorry, I'm not getting too deep into these charts.
No,
I know I was up late, trying to find stuff, but I'm more of I've been thinking a lot more than I've been charting. So as we're doing
no worries,
this,
man.
so
I think everybody's loving it. Crypto Crunchy said,
yeah.
"Great job, guys. I appreciate the information and a nice presentation of that information, guys. Drop a 1 in
Thank you,
chat
Crypto
if you are loving Lunar Beach's crypto. I'm loving him. I think he's got a great eye for the charts." So let's press on. Let's keep getting into some more charting here. I do have the factoid of the day.
Yes.
I haven't forgotten about that. We'll get to that here in just a second.
So yeah, basically my thesis was that all of these cryptos were at least going to do a 50% retracement. So I'm kind of making my plays based off of that, and based off of where Bitcoin is in its cycle also. So everything comes back to Bitcoin. It always comes back to Bitcoin because the crypto market is still going to go off of the back of Bitcoin because it's kind of the underpinning of the market. It just kind of is. It's like the world reserve cryptocurrency.
I love it.
At one point I was thinking Bitcoin's digital gold and XRP or XLM is digital cash. Something like that. Now I've gone a little bit. I won't say I've completely left my loving XRP, but I was into it. I was into it very heavily when I first got into crypto, but there's been a lot of issues going on in the community. They're trying to find, they're trying to do more development. They say that the chain is very difficult to even develop on. So they're kind of having discussions about all different kinds of things. And then we have the escrow talk there. We have the community talking about they're wanting to burn the escrow and Ripple's escrow, which they can do. They can burn the escrow. The validators can if they wanted to, if they came to a consensus to do that. But there's one thing that I did want to point out, and that is that Ripple cannot liquidate their XRP. They cannot. It is locked up in the escrow. It gets released once a month. 1 billion XRP gets released once a month or unlocked. Then they go into a selling phase. Whatever doesn't get sold then gets packed in and thrown to the back of the escrow chain. It's like an escrow chain. And then they throw it to the back of that escrow chain. And then they keep moving forward for another $1 billion or billion XRP unlock for the next month. And this, because of this constant moving back of the extra XRP, Ripple has now pushed it out to where it's going to be 2027 before it's all unlocked. It started off as like a 55-month plan, but now it's going to have to be pushed back. So they're just going to keep doing that. And another thing on that, I just want to say that Ripple. So it's kind of like a you got to think about it. You've got to think, okay, if I want to get involved with this cryptocurrency, I've got to have an understanding that this company does have a lot of sway with it. And if you're comfortable with that, cool. If you're not, cool. Like, I completely understand it.
Mm-hmm.
For me and the community, it kind of seems like everybody's kind of getting tired of the Ripple narrative. Just because they own so much. Now they're at like 40, they're down below 50, but they're down to like 46 billion XRP locked in escrow. And, as long as they're a nice steward of the ship, so to speak, I think the community is still going to be okay with it. But, the second they do something that the community doesn't like, or the validators don't like, more importantly, then the validators might say, okay, we need to make some changes because you're handling your XRP in a manner that we don't like. You're doing it, I can't think of the word, but you're just doing it in a way we don't like. So we're going to burn all your tokens, whatever it is. So yeah, I mean, it was the first DEX, for those that don't know. The XRPL was the first decentralized exchange. It is an exchange. A lot of people don't know that. They also don't know that it also doesn't have liquidity pools. It just transfers value. It's bigger than my head, but I think the reason why it tends to fall when Bitcoin falls is because it is an exchange. It is a decentralized exchange that other cryptos come onto and transact, right? So they have, like, one of the new things that they're trying to do is add an AMM to the XRP ledger, so they can get that automated market making to make it a little more efficient. So, but right now that's been shot down by the validators because they don't like some of the provisions in it. So
yeah,
it's a hot mess. But we're still putting in higher lows, and as long as we're doing that, I'm okay.
Well, with so many alternatives
Bark.
to XRP, it just seems like all the internal drama. And I'll be honest with you, because we talk a lot of smack about XRP here in the Investing Bros. We do. Tim still holds it. I don't. But we talk a lot of smack. So there's also a decent amount of drama right now in Cardano, right? And so these communities have to be careful with the infighting and how that looks, because Solana because Solana is kind of the elephant in the room. I mean, Ethereum is as well, but Ethereum is a little bit more. It's different in that Solana is kind of a new up and coming, young blockchain that's going to try and make a run to be the Ethereum killer, right? And so I think these communities, and XRP and Cardano kind of have, other than Ethereum, have the strong altcoin communities, strongest, you could even argue. Whereas Solana, it doesn't seem like there's that much infighting. They're coming out with phones, they're coming out with new versions of those phones. And yes, they're having outages in their blockchain, but the price doesn't sell off. The community is comfortable with that. And that's a little bit scary, because that's scary to the XRPs and the Cardanos of the world. Because you look at Salana, which has happened this week, and they're okay with that, right? And so that kind of tells you.
I see a lot of comments like Visa,
strong.
MasterCard go down all the time,
Yeah,
and I'm just
Microsoft Teams goes down, Facebook goes down, like huge consumer applications go down, and the money behind Solana is different from the money behind XRP and Cardano. The money behind Solana is a lot of VCs, and I talked about that at length this week, so I won't talk about it too much more. But that is a huge factor, and I think XRP, like, one of the ultimately it gets down to, kind of put it into black and white terms, heads have to roll. Like, this capitalism hasn't gone anywhere, competition hasn't gone anywhere. Heads have to roll. And when I'm looking at XRP versus Cardano, I think Cardano sticks around, because there's much more happiness, there's more joy for
definitely.
If XRP can't even integrate an AMM, an automated market maker, right? Where while and forgive me if I'm wrong, but there's not much. Maybe you can correct me if I'm wrong. There's not much development on XRP or XRPL, whereas Cardano is.
So that has been Yeah, that's been a topic of conversation a lot within like the last month.
Mm-hmm.
Is basically the XRP community is really trying to push more development, more stuff to be developed on the XRPL, and they're struggling with it, man. So that's one thing that's got me just like, ugh. It's kind of, I hate it because it was my first crypto. It's kind of like one of those things. It's like your first
Sure.
love, and you
Yeah.
just, I want it at least to do well for the community, even if
Mm-hmm.
I'm, not as heavily invested in it as I used to be.
Mm-hmm.
I still want it to do well for the community,
Mm-hmm.
because I've grown relationships with these, with a lot of these people. So it's just,
Hmm.
I want it to do well, but luckily or thankfully, I've been out there trying to get into their heads, say, hey
Yeah.
guys, you've got to diversify your portfolio at least. Like, please diversify your portfolio. Quit watching this thing just go down and you miss out on gains. Like, it just branch off,
It's
Don't
kind of
don't be
wild.
married to any coin.
Yeah, it is
Yeah,
kind of
I don't
wild.
like being married to coins.
Yeah, I think Bitcoin is a good coin to be married to. I think there are some that are better than others for sure.
Mm-hmm.
Within this conversation, it kind of got into an interesting thought space where, XRP, these different community coins, right? XRP and Cardano, they're all kind of like looking over it at Solana, which is, it seems like it's a lot more like Wall Street mature,
Robust.
like where they're much more like streamlined. We're heading in this direction, and it's more centralized, so we can do that a lot
Right.
faster. And that
Yep.
might be a very successful model moving forward, especially within that larger context of, crypto is ultimately competing with China and the United States to create like this internet based nation where the next Uber is going to be built on top of the next Airbnb, right? And the next YouTube and things
100%.
like that of the future. So when something goes wrong in China or something goes wrong in the US or Europe, companies can compete, but they don't say we want to file with the the Federal Office of Intellectual Property for the United States. We want to just build it on Ethereum, right? And it's going to be built so well and so fast that that's where it lives, right? And if anybody tries to copy it, nobody's going to use the copy. They'll use the one that's on Ethereum. And so when you look at an XRP and a Cardano, it's like, I think Cardano has a way better chance than XRP, right? But I think that Solana has probably a better chance than both of them. Just because of the way that the market is shifting, you're getting a lot more traditional retirement Wall Street money coming in. These folks have gone through the transition of seeing Warren Buffett say, okay, I'm going to start allocating to Apple, right? That was a pretty big transition for the investment world. Now we're probably, I have no idea off the top of my head, but 7-10 years into that transition. And now we're asking the same group of people, hey, go ahead and invest in crypto, right? And they're like, what? And then some of them are like, okay, it worked when Warren switched to Apple, let's do that. And so some of them are going to be rewarded, but others are going to be like, this doesn't make any sense. And so anyway, that there is a wider context. I think that shift is going to bring in a lot of a different, more Wall Street weighted mindset. And I think Solana's right there, ready to serve that up. I think AVAX is kind of right there, ready to serve that up as well. So it's not just Solana.
Yeah.
But anyway, I'm not saying you might have interpreted some of my phrasing here to be very black and white. I see a lot of room for wiggling, right? And there's a lot of assumptions, a lot of lack of education on my part, the limited perspective. But overall, just wanted to get that off my chest. Now, I've got a factoid of the day here for you, Lunar Beach's Crypto.
All right, let's go.
And this factoid is brought to you by the same organization that's bringing you this episode today and making it possible, which is decrypted.tax. If you haven't invested or traded in taxes in crypto this year, you want to go over to decrypted.taxes to get your free consultation. Tell Ernest we sent you, and you get 25% off of those tax services. Lunar, Earth has a surface gravity of approximately 9.8 meters per second squared, while the moon has a fraction of that. Which fraction does the moon have? Is it 1/6 of that gravity, 1/8, 1/12, or 1/4 of the gravity of the Earth?
9.8 meters. Earth has a surface gravity of approximately 9.8 meters per second. What am I, quantum physicist? The quantum physicist, astrophysicist, whatever you call them. Yeah, Earth has a surface gravity of, I'm trying to think, of approximately 9.8 meters per second. Wild. Okay. Squared. While the moon has what fraction of that? Well, Shroom, I'm going to just do the good old college. Just give me the C.
You want to go C?
Yeah.
All right. So the answer to this is
Not C.
A, 1/6. So since the moon's surface gravity is 1/6 of the Earth's, this is why astronauts' movements appear bouncier. So it's 1/6. You were close. You were close. And of course, I expected you to get this. No, I'm just kidding. I think very, very few people.
Why? Because I have a giant moon on my as my logo. That's not why.
Exactly.
No, man. We just go to the moon. We just ride the waves to the moon, and so that we can party on the beaches of the moon. That's kind of the whole, essence of it. So
I love it. Well, we've covered a lot. And if you guys want to see more of Lunar Beach's cryptos charting and perspectives, I would love to see you all go and subscribe and follow him on Twitter and YouTube. And Lunar Beaches, I would love to see a video on your thoughts on XRP, as a long-term holder, as someone who, it sounds like you've had an interesting evolution of thought as a member of that community.
Definitely.
I'd love to see a video on that and just kind of your thoughts on that and how that's going. But other than that, man, it's been great. Folks have loved you.
Yeah, man.
They've loved you. You've been a huge hit in the chat, joining here on the Saturday edition for Investing Bros. Anything to say as we kind of close and sign off for today's episode?
Just fight those narratives, guys. Fight those narratives. Don't fall for them. FOMO or FUD. For me, I like to sell FOMO and I like to buy FUD. And when I say that, I mean the extremes, not financial advice either. But yeah, follow me. I do a live stream bright and early in the morning, 6:30 a.m. Eastern Standard Time. Yeah, I got to do it before my real job. So I get up in the morning, do a 30-minute show Monday through Friday, 6:30 a.m. Eastern Standard Time. And I appreciate all of you in the chat that showed your love. Hit those likes on your way out. And and I appreciate you, Shroom, for having me on the show.
I appreciate you indulging my mini tangents here on the Saturday. We like to zoom out and try to digest everything.
That's what I love. I love doing that, man, because I was going to come in here and talk about all kinds of other stuff too, like wristbands that pay you as you work in crypto. But we'll get into other stuff.
That's pretty cool. Yeah, well, you all have to subscribe and follow Lunar Beaches Crypto to learn more about that kind of stuff. But we'll definitely be having you on soon. You love it. We love you. The chat loves you. We'll catch you next time, and we'll be going live again 9 a.m. on Eastern Standard Time on Monday. We'll see you there, bros.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shroom's news, catch a word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividends. Trying to make paper, turn that better to cake. Money like Lego, connect the dots stack bank. We are investing bros. We are investing bros.